Good day Forex trader. Your USD signal, triangle pattern forms after hawkish Fed. The pair will likely keep rising as bulls target the next key resistance level at 1.1100. Bullish view. Buy the Euro USD pair and set a take profit at 1.1100. Add a stop loss at 1.0960. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.0990 and a take profit at 1.0945. It has formed a stop loss at 1.1125. The Euro USD pair was little changed after the Fed decision and as Ukraine and Russian negotiators moved close to a deal. It is trading at 1.1033, which is about 2% above the lowest level this month. Fed decision and reduced tensions. The Fed concluded its two-day meeting on Wednesday and decided to lift off. The committee decided to hike interest rates on the backdrop of a tight labor market and a high inflation rate. The bank raised interest rates by 0.25% in the first time to do so since 2018. The dot plot showed that the members were open to 6 more rate hikes this year and 3 more in 2023. At the same time, the bank said that it will be open to hike by more than 0.25% in some of its meetings this year. The Euro USD tilted higher after the hawkish meeting because it was in line with expectations. For one, the unemployment rate has already dropped to 3.8%. Recent data also showed that the country had almost 11 million job vacancies that are yet to be filled. At the same time, inflation is still rising and there are signs that the situation will worsen because of the crisis in Ukraine. Data published last month showed that the headline inflation surged to 7.9% while the core inflation rose to 6.4%. The Fed has emerged as being more hawkish than the European Central Bank, ECB. In its meeting this month, the bank decided to lower the amount of asset purchases. It hinted that a rate hike will possibly come later this year. The pair will react to the latest European inflation data. Based on the preliminary number published 3 weeks ago, analysts expect that the bloc's inflation rose to 5.8%. Euro USD forecast. The 4-hour chart shows that the Euro USD held steady after the Fed decision and after signs emerged that a deal between Ukraine and Russia was possible. It is trading at 1.1036, which is higher than its monthly low. The pair has formed a symmetrical triangle pattern and is currently at the upper side of this pattern. It has also moved slightly above the 25-day and 50-day moving averages while the MACD has moved above the neutral level. Therefore, the pair will likely keep rising as bulls target the next key resistance level at 1.1100. GBP USD signal, extremely bullish ahead of BO decision. The pair will likely keep rising as bulls target the 50% Fibonacci retracement level at 1.3325. Bullish view. Buy the GBP USD pair and set a take profit at 1.3325. Add a stop loss at 1.3050. Timeline, 2 days. Bearish view. Set a sell stop at 1.3110 and a take profit at 1.3010. Add a stop loss at 1.3250. The GBP USD pair held steady on Thursday morning as investors reflected on the hawkish Fed decision as they waited for the Bank of England, BO. It rose to a high of 1.3160, which was the highest level since March 10. Fed and BO decisions. The GBP USD pair rose in the overnight session after the Federal Reserve delivered a relatively hawkish statement. After concluding its two-day meeting, the Open Market Committee decided to increase the federal funds rate by 0.25%. This increase was in line with what most analysts were expecting. It was also in line with what Jerome Powell hinted during his congressional testimony 2 weeks ago. In his statement, Powell hinted that the bank will embrace a more hawkish tone in a bid to contain the rising inflation. He estimated that the Fed will hike interest rates in all the remaining meetings of the year. The next key catalyst for the GBP USD price will be the upcoming interest rate decision by the Bank of England, BO. Like the Fed, Analysts expect the bank to deliver another 0.25% rate increase as it tries to battle the rising inflation. The BO has embraced a more hawkish tone for a while. It delivered its first interest rate hike in December and then in February. If it raises in this meeting, it will be the first time in almost 20 years that it has increased rates in 3 straight meetings. Like in the United States, the UK is also battling the current wave of inflation. Recent data revealed that consumer inflation has jumped to the highest level in years while the unemployment rate has risen. The GBP-USD pair also rose as global risks declined following reports that Ukraine and Russia were nearing an agreement to stop war. GBP-USD forecast. The 4-hour chart shows that the GBP-USD pair has made a strong recovery in the past few days. It has risen from this week's low of 1.300 to the current level of 1.3160. On the 4H chart, the pair moved above the 25-day and 50-day moving averages while the MACD has moved above the neutral line. The pair is also slightly above the 23.6% Fibonacci retracement level. Therefore, the pair will likely keep rising as bulls target the 50% Fibonacci retracement level at 1.3325. AUD-USD signal, more upside after strong Australia jobs data. The pair will likely keep rising as bulls target the next key resistance at 0.7400. Bullish view. Buy the AUD-USD and set a take profit at 0.7400. Add a stop loss at 0.7250. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7250 and a take profit at 0.7200. Add a stop loss at 0.7320. The AUD-USD price continued rising on Thursday morning as investors reflect on the strong Australian jobs data and the Federal Reserve decision. It is trading at 0.7314, which is about 2% above the lowest level this week. Fed decision. The FOMC concluded its 2-day meeting on Tuesday and decided to deliver its first interest rate hike since 2018. The bank also signaled that it would implement a series of rate hikes this year. Precisely, it hinted that it will hike rates in all the remaining 6 meetings of the year. In a statement, Jerome Powell said that the committee had decided to hike rates at the backdrop of a tightening labor market and high inflation rate. He also said that the bank could even consider hiking rates by 50 basis points in a few meetings. In addition to the 6 rate hikes it expects this year, the bank signaled that it will deliver additional 3 increases in 2023, bringing the official rate to 2.8%. The decision came at a time when American consumer prices have surged to the highest level in over 40 years because of the ongoing supply chain challenges. Also, the labor market has tightened, with the unemployment rate falling to 3.8% from the pandemic high of 14%. The AUD-USD pair also rose after the latest jobs data from Australia. According to the country's statistics agency, the unemployment rate declined from 4.2% in January to 4% in February. That was the lowest it has been since the pandemic started. The country added over 77.4K during the month while the participation rate rose to 66.4%. Therefore, these numbers signal that the Reserve Bank of Australia, RBA, will also start hiking interest rates in the near term. AUD-USD forecast. The AUD-USD pair rose to a high of 0.7312, which was the highest level since March 11. As it did that, the price managed to move above the 25-day moving average, signaling that bulls are in control. It has also moved above the ascending trend line shown in black while the MACD has moved above the neutral level. Therefore, the pair will likely keep rising as bulls target the next key resistance at 0.7400. On the flip side, a drop below the support at 0.7250 will invalidate the bullish view.